Jamie, who do you side with, Goldman and Fidelity or Bill Gross?
Absolutely Bill Gross. I mean, China is a big deal story. And yes, China has banned people from selling their stock. They've locked up 50% of the shares. They've forced insurance companies and pension firms and sovereign wealth funds to buy into the state-owned enterprises. So yes, there's this bounce of those big state-connected companies, but there are all of these other stocks that are just locked up. And if you're an owner of those shares and you're some little mom and pop and 80% of the investors are retail investors, when you can sell, maybe you're even forced to sell, you're very, very likely going to do it. And
you will sell.
You will sell. And so what they're betting is they
Jamie,
can...
let me ask, how much, you mentioned that mom and pops are 80% owners.
Right, yes.
But we hear so often from China experts that this market, it doesn't have really that much of an effect on the average family in China. I mean, because they only have, say, a few % of their wealth tied up in these stocks.
Yes, I don't think that unless something else bigger happens, there's going to be a massive impact on the real economy of China. But the big story here, in my mind, is what this does to Xi Jinping's reform agenda. Because 3 years ago, 2.5 years ago, he and his government said we're going to let market forces allocate resources. And the biggest problem that China faces is the misallocation of resources stemming from the misallocation of political resources. And the question is, what does this do to market reforms and political reforms?
Yeah, I think that this is the beginning of a much larger turn down with China. You know, retail is always the last to the party. And the fact that you have mom and pop from China actively, aggressively speculating in the market says this is much more like 29 than it is 87. The problem with that is that the Chinese government, in response, is going to become more and more reactionary and authoritarian as confidence continues to fall. And, you know, even though they've closed down the markets effectively, that's not stopping the decline in confidence. In fact, as a researcher, I would say it's exacerbating it.
Of course.
So the problem is that mood is continuing to drop while you have a market that is highly regulated. And at this point, if they try and reopen the market, you'll see a similar cascade, not unlike what's going to happen in Greece when they reopen the banks.
Peter, in the meantime, how do you measure this confidence?
I measure it by how people are behaving. So to watch the Chinese government go from encouragement to draconian steps says someone in China, policymakers react to mood. They are terrified that this free market economy has gotten away from them. And the challenge will be that in response, as mood keeps falling, they're going to have to keep becoming more and more authoritarian, more nationalistic. And I don't think people have quite grasped what this means for transnational corporations who are operating in China.
Yeah, I think Peter is exactly right. The story here is not that there's a market correction. Of course, there was always going to be a market correction because the increase was obviously a bubble. The story is that the Chinese government has gone nuclear in its response to this very natural downturn and has put all of its credibility on the line.
Why?
Why is the Chinese money, though? Not money, right? I mean,
well, there is money because
$20 billion.
Wait, but it's not just that. They're backing all of the margin loans, which has the potential to be much bigger. They're forcing the sovereign wealth funds to invest, the insurance companies to invest. So there's a lot of liability. China has a lot of money, so they can cover this problem with their cash. The issue is that they've gone nuclear in response. And so now it's a lose-lose situation for the Chinese because if the stock markets stay high, let's just say they bail this out, then they have equity valuations that just don't make any sense.
And if they go like 100 times earnings.
Ridiculous. And if it goes down, a little less. But if it goes down, then they lose because the population looks at the government and say, we thought you were magicians and you can't even keep stock prices.
Why, though, is the Chinese government so compelled to act in this situation?
Because the story in China with its citizens is this is a centrally planned economy. The state is in charge. And so to have markets running away from their control, they have to demonstrate that they are in control. And it's, if you think they're nuclear now, just wait, because as confidence falls, they will be perceived as increasingly impotent. Our confidence in governments and institutions is reflexive. They're only as powerful as we believe them to be. And so the state of China has a real challenge in maintaining control in a world of falling confidence.
What's to stop the government from just ordering the People's Bank of China to buy stocks.
Well, that's essentially what they're doing. And the essential problem here is that there's a schizophrenia in the Chinese government. The Chinese government is the problem.
Why would we find that so crazy?
Well,
we ordered our central bank to buy bonds.
Well, yes, we've bought bonds. Yes, we've lowered interest rates. We haven't tried to essentially bail out the entire market. In the
yes,
great,
we did.
No, but in the great crash, if we had suspended,
it's fascinating to see how people who were celebrating and praising the action of the U.S. central bank are now condemning what you saw in China. And as a researcher, that's really an important transition. We've gone from central banks as omnipotent to central banks muddying the water. And if that trend continues, then you have an entire system that has become dependent.
The one thing we did differently is the Chinese are essentially taking money away from the average person, or at least locking it up for the time being, whereas we just completely punished savers. We penalized savers. We took away future income from savers, while Chinese people are actually
And of course, the mechanisms are different.
Right.
The central bank here is ostensibly independent, of course, and and does not take its marching orders from the president.
Yeah, but again, the essential issue here is that the Chinese government is both the problem and the solution. It's much more systemic in China because they have this misallocation of resources, and the government has said that we need to let market forces better allocate resources. And now the stock market goes down, and they panic, and they pull out every tool, and there's even more tools that they can use. But if China doesn't reform its economy, then it runs into this middle-income trap, and it has bigger problems that it's not organized for the economy that it needs to be.
It's great promise, effectively, right? The bargain.
And that was exactly right, because the story of Xi was, let me centralize power, and I'll deliver economic reform. So now you have over-centralized power. The state-owned enterprises are actually stronger than they were, and you have a situation where it's very unlikely that these market-oriented reforms can work.